On the first Friday of every month, the Bureau of Labor Statistics for the United States reports at 8:30 in the morning on the previous month's employment figures. I have the employment figures here as reported by the BLS for May of 2014, and there's a few different terms and things that come up here that we definitely want to highlight as we're going through here. So the first is the labor force itself. And the labor force is currently right at 155.6 million individuals. And these are individuals who are currently in the workforce, and we think about them as the total number of workers, including both the employed and the unemployed. And so this labor force, there's two things that make up that labor force there. It is here the employed individuals and the unemployed individuals. There's also a secondary number of interest, which is the civilian adult population. And there are currently 247.6 million individuals in America that are, in essence, are eligible to work, that are in the population itself. When we do the employment and unemployment rates, and it's typically the unemployment rate that is calculated and used, that is the number of individuals who are unemployed divided by the labor force participation rate. And so if we wanted to go ahead and do that, we would say the unemployment rate as it is typically reported, the unemployment rate here, that is equal to 9,799,000 individuals divided by the labor force of 155,613,000. And if I go to my calculator and take 9799 divided by 155,613, I get an unemployment rate of 0.06297, or I'll just round that to 3. So this is and we'll just round this up, or 6.3%. And so what this is saying is that, and what is an unemployed individual? An unemployed individual, someone who has been looking for work within the last 4 weeks, but is currently not employed. So they're in the labor force because they want to work, they are actively looking for work, however they do not currently have a job. That is one measure of employment, of unemployment. I'll just say that the unemployment rate itself, this has been relatively high in recent years, as high as 10%. We'll look at a few charts to kind of look at that over time. It has definitely come down some, and we're going to think about why that has come down as well. And that kind of leads us into the labor force participation rate. So the labor force participation rate here, this is the labor force divided by the adult population. In essence, everyone who would potentially be available to work. And so that is just going to be 155,613,000 individuals divided by the civilian adult population, 247,622,000. And if I take 155,613,000 divided by 247,622,000, I get a labor force participation rate of 0.628, or 62.8%. And so this is another way of saying 62.8% of the individuals within the economy, of the adult individuals in the economy, are either employed or unemployed or kind of looking for work. They are active participants in the labor force. And so that obviously gives us the difference, the other 37.2% of these individuals who are not in the labor force. These are individuals who are not looking for work. They are not employed. They're not unemployed and looking for work. These are individuals who are not employed at all and are not interested in being employed either. As you can imagine, the unemployment level is this unemployment rate is just one of many rates that we might be interested in, because you can imagine that there are individuals who maybe they are discouraged, and we typically think of them as discouraged employees, that they are discouraged workers, that they previously have looked for employment, but maybe they've decided to drop out of the labor force. They are no longer actively looking for a job. Or maybe they've got a job, but it's a part-time job, and they would rather have a much better job, or they would rather have a full-time job. So they're kind of displaced workers in that case. there's a number of different unemployment rates. This is the most common one that is, this is the one that is always reported. It's the unemployed that are looking for work divided by the labor force itself in that month. But I just say that so that you know that there are other rates as well, and that the unemployment rate itself, as it is typically reported, probably understates the true level of unemployment to a certain extent, because it doesn't report all the individuals who are really displaced or discouraged on the marketplace. So now that we've kind of got those out of the way and we've thought about what the percents are, let's kind of go out and take a look at some of these numbers. One thing to keep in mind is, I mean, obviously America is a large country. We're the third largest country in the world, but we do have 145.8 million individuals who are currently working full-time. That is a very large population working full-time. And so obviously that's one of the big economic engines that we've had as far as consumption and individuals buying homes, things of that nature. So let's go out here to some of the spreadsheets and we can take a look at some of the charts as well. The first thing we see here are the numbers that we were just looking at, which is the Bureau of Labor Statistics. They release the information on the first Friday of each month. This is for May 2014, the data we were just looking at, and I'll just kind of highlight a few things. So one, they're always going to start it off and they report how much employment fell or rose by, and it's always non-farm payroll is what they report. So it's total non-farm payroll rose in that month, May 2014, by 217,000 individuals, and the unemployment rate was unchanged at 6.3%, which is what we just solved for. And here you can see where employment really increased: professional and business services, healthcare, social assistance, in the service sector, bars and restaurants, and transportation and warehousing. So they always give some details. And I just say this as well because it's always useful. I mean, obviously a lot of things are covered in these types of classes and in books, but it is always useful to go out to the source material itself and really take a look through and see what they're saying, because you will see some interesting things. One, here they're telling us a little more about the unemployment rate across different groups. So here the number of unemployed persons was unchanged at 9.8 million individuals, which is what we saw as well. And then we can see some other things that are being reported here. Among the major worker groups, the unemployment rate for adult men was 5.9%. For adult women was a little bit lower at only 5.7%. Teenagers have a much higher level of unemployment, as you would expect. They tend to fall into lower wage jobs. They tend to fall into jobs where part-time work is the work that they find. And you also get a lot of kind of dissatisfied or displaced workers here. The white unemployment was 5.4%. The black unemployment was 11.5%. Obviously, we have big discrepancies by racial bounds in this country still when it comes to employment as well. Hispanics were at 7.7%. And then we can see a few different things here as well. And I'm just going to highlight a few other things that are mentioned here. And the main one that I want to show here is that the number of long-term unemployed, and that is defined as individuals who have been looking for work but have not found it yet, and they've been looking for work for over 27 weeks. So for more than 6 months, they've been looking for work and have not been able to find it. Remained essentially unchanged in May of 2014 at 3.4 million individuals. If we go back to the total amount of unemployed, right, that is 9.8 million individuals. 3.4 of them have been unemployed. 3.4 million of them have been unemployed for at least 6 months. That is a very long time to go without a job, particularly when you're looking for a job. And so these individuals accounted for 1/3 of the unemployed. Over the past 12 months, this number has declined by about 1 million individuals. This was a really big issue during the Great Recession, 2007, 2008, 2009, 2010. And then you can kind of go through here and see just all the amounts of data that they report. I'll just highlight here real quickly that this data comes from the Bureau of Labor Statistics, and it's a monthly survey that they do. So this is survey data. So let's jump into a few charts here. I've gone out to the St. Louis Federal Reserve. They keep a great system of data, historical, that you can look at here quickly. And we're going to just do this in the charts here. We won't go over to spreadsheets or to... we won't kind of mess with this too much. I just want to highlight a few things. So one, This is the civilian labor force. And we can see that this civilian labor force has obviously increased over time. We would have expected it to increase over time because the population of America has been growing. So that certainly makes sense. This is thousands of persons here on the y-axis. But the thing that I want to highlight is that, and I'll just say for all of these charts, the grayed out sections, that is when we had a recession. So all of these gray areas are quarters that we've had a recession in. And here you can see we kind of peaked out right around 155, 155, 154, and we've actually been at this level of civilian labor force for going on, well, about 7 years now, which is one of the reasons that the unemployment rate has been falling. So we'll kind of dig into that a little bit more, but what do we know? The unemployment rate is the number of unemployed individuals divided by the labor force. This number has stayed relatively unchanged. This denominator has changed very little, and so as this number has come down, obviously the unemployment rate is coming down. The problem is we are having this issue here where the labor force hasn't changed much. And I'll say that in economics, this is really a big question. We don't have a lot of great answers for what's happening here. Obviously, there's some retirement going on. The baby boomer population is going into retirement, so we're seeing some exodus from the labor force for those reasons, but there's a lot of data that would indicate that this number still should have been increasing in recent years, and it has not been. If we look at this in terms of, first, before we do that, here is the number that are not in the labor force. So this would be the number of individuals, right? If we kind of go back to our analysis here, this would be the difference between the total adult population and the labor force participation. So this is the 37.2% that doesn't participate. And here we can see that's right about 92 million individuals that are not in the labor force, that are adults but are not in the labor force. And we can see that that has increased as well. I would just highlight that we're actually seeing an increase in the growth rate here from 2000, so from here January 2000 to January of 2007, we saw a growth rate of the of this number not in the labor force of 1.6% per year. From 2007 to 2014, for those 7 years, that increased to 2.4% increases on an annualized basis. So we've seen an increase of individuals who are not in the labor force, that are adults that are not participating in the labor force. This labor force participation rate, that is what we solved for right here, is the 62.8% as the labor force divided by the civilian adult population. And that we can see has really been falling off. That has been declining here. And that's what I was starting to say. We don't have a great explanation for why this has been happening so severely. Obviously, there's some things going on in the baby boomer population, but obviously we were picking up a lot of individuals here as women were really increasing in the labor force, and they were coming additionally into the workforce as two-income earner households for a lot of households across America. But this has been a big reason, or really this is the main reason, that we have seen unemployment rates drop so much since the Great Recession in 2007 and 2008. Just a few more things here for us to look at. We've got the labor force participation rate for women, and obviously that is increasing a lot. This is what I was just talking about, how during the 50s, 60s, 70s, 80s, obviously there was a lot of women coming into the workforce for the first time, so that was really buoying the overall labor force participation. Here for men, the axis is a little different, but we can definitely see the trend line, which is for men, and this is true for a lot of economic indicators right now, things are not looking great. We have a lot of men who are not participating in the labor force, and this is really where the big question is coming in, kind of what is happening with all of these men here. There's a lot of economic analysis that's going on there, and I think it's some really interesting things that we can dig in down the road. I want to show a little more information here. So we've got the average duration of unemployment. We were starting to get at this question. This is how long, and in May of 2014, the average duration was 34.5 weeks. That is a long time to go without having a job. So this means that you were looking for a job, but you were unable to find a job. And really what I wanted to show was over time how this has changed. So the number of weeks here, in previous recessions, we can always see that it's after the recession, Unemployment tends to be a lagging indicator, so we have a recession, and then after the recession, after that gray bar, that is when the unemployment rate increases. And where we would have unemployment levels increase as well. But we can see that this is really the first time that we've seen numbers this high in the modern economy. When individuals, and we talk about the Great Recession being very painful, this is one of the ways that it was very painful, where we saw kind of average unemployment that was, an average duration of unemployment that was very high. I mean, at 40 weeks, you were getting towards almost an entire year where you were looking for a job, and this was the average. So obviously, there was a lot of individuals way on the high side of that. Keep looking through just a few more of these charts here. We've got the number of civilians unemployed for 27 weeks or over. So this would be extreme unemployment, and you can see obviously this peaked right after the recession at just over 6.7 million individuals who, at the peak of the recession, were unemployed for over 27 weeks. That has been falling, which is great, but we can still see, even if it's falling, it is at an incredibly high level relative to kind of modern economic levels. Let's continue looking through here. We've got the civilian unemployment rate, and this is what we were just solving for at 6.3%. And here you can see back to 1950. If we were to take this back just a little bit further, we would see the peak really being up around 20-some%, which was during the Great Recession. Other than that, we've seen some peaks here after recessions where we've been in the 10 to 11% range. We kind of topped out right around 10%. And we have been coming down steadily as a result of some unemployment going away, and then obviously as a result of the labor force participation rate decreasing as well. And here you can see some trends after recessions as well. The one thing that you might see is how long this has really taken relative to other recessions. We typically see a return to normal employment or full employment very quickly. We did not see that in this case. Here I want to give you a little bit of good news, I guess, for college graduates. The unemployment rate, if the unemployment rate for the overall economy is 6.3% for college graduates, it is actually pretty low. It's only 3.0%. So getting a bachelor's degree is still a great investment, and this is for individuals who are 25 years old to 34 years old. So kind of right out of college, we saw that number spike up, but even in its worst, whereas the full civilian unemployment rate was upwards of 10%. This really peaked out at maybe 6% at its peak for individuals kind of right out of college in the late 20s and early 30s. And then we just want to take a look at a couple other things. The total unemployed, this is the percent that are unemployed less than 5 weeks. And we've seen this number decreasing over time. This is a percent of the unemployed here, and we can see that that has been decreasing to pretty low levels. And if we just go over here to this next chart, we can see kind of the opposite side of that, which is the number of civilians that are unemployed for 15 to 26 weeks, which right now is currently standing at 1.44 million individuals. Obviously, there was a big spike there after the recession. So just wanted to show you a good selection of data here to understand what's been going on with unemployment and labor force participation. Those are two crucial things that have really been driving the economic story post-2007. There's a lot of questions as far as why that's the case, why the why the labor force participation rate has been falling like it has, but also wanted to show you some comparisons as to different age groups and men and women and some of the trends over time since 1950.